They're expected to cut rates, but that's in part because the economy is weakening. This is the Comstock Channel. I'm Joe Camp. I'm reflecting on the price action for grain futures over the last couple of months, particularly since the August crop report when corn futures made their contract lows. We had another crop report last week, and actually bearish seeming crop report, but bullish reaction. Makes me think about these sayings that the low point for prices is when most people expect bad news, not after the bad news comes out. And also that markets climb a wall of worry. And of course, we've had that over the last several months, and yet finding a possible upside pathway into harvest, not dissimilar to last season. Will that continue, or are we seeing a so-called bull trap? A lot of questions here. I want to take the part of the bear and think about these concerns, this wall of worry that I can present to you. And you can decide, you determine what you want to pick, what you could disagree with or not. It's always the bulls and the bears, and let me be bearish first. The bulls, they'll have their day. But I want to start, of course, with the elephant in the room, and that's soybean exports in China. Soybean export sales have had their worst start of the marketing year since at least 2019, which of course is when the first trade war with China was. And we're looking at, by the time what we now have is a November 10th tariff deadline comes with China next. At that point, a year ago, China had already committed half of their eventual soybean purchases for the year. That would end up to being just short of half of all soybean export sales from the U.S. So China, of course, being by and large the top customer. This is 825 million bushels of demand that is missing. And you maybe make that up from other countries like we did in part during 2019 and that period of the first trade war. But in part, that interest itself was there because prices were as low as they were, and you still had soybean carryout in those years at levels 900 and 500 million plus bushels. You look at that last year, 2019, of the trade war, and we had soybean futures breaking below $8. The year that would have followed saved the market, you could say, because of the soybean acres, for one, dropping so considerably from 2018, over 12 million acres of a swing. You also had, of course, yields that year lower. And this is the similar bearish production scenario for corn, too. Soybeans looking now at a record yield this year by right now a bushel and a half more than above the previous record and over 6 bushels above 2019. Corn, you're thinking still about 5+ bushels above the record and above the trend line. And where is this crop going to go? I mean, if you think the USDA is going to lower yields that much before January or September, if yields do come down, who cares? Because where are you going to put all of what will still be huge crops, even if they're a lesser record than what was previously established in August or September? Now, you're looking at not enough space to hold record corn crop production-wise, and not a trade pipeline to fill for soybeans that could take the ramp off of the early harvest as normal. We're looking at zero export sales for soybeans to China right now, only less than 400 million bushels total leading up to October, when we're normally ramping up to what would be 100 million bushels of soybeans shipped out in a single week. A good thing to have these new soybean processing plants to absorb some of that demand, but to think about, again, the sheer numbers of what can be missing with China and what that can mean with fall basis, as we've talked about the record negatives out in the Western Corn Belt for soybean cash bids. You don't want to get too much ahead of yourselves on the processing end of it either, and especially when you're having to rely on the government. I mean, this is just now after the most recent reports, favorable enough on biofuel policy, renewable volume obligations, and the EPA and their half decisions on the small refinery exemptions. We're now in another public comment period. After that, it'll probably be weeks, months before the EPA makes or not the next ruling deadline, and where will we be at, not only in harvest or beyond, but in the market at that point when you could have another bullish point on biofuels. So you think anything about government policy being bullish, whether it's trade or biofuels, if you think that's going to come to help the market, it seems more like a pipe dream at this point. Now, emergency economic aid from the government is another thing, and that brings me to the bearishness surrounding the economy. Today is the central bank meeting. They're expected to cut rates, but that's in part because the economy is weakening. Of course, the rest of the Treasury market doesn't have to follow suit with the Fed funds rate, and we can see that, especially if the bond vigilantes want to continue to press against what we see as no easing of the government deficit problem. You also have doubt about the effectiveness of the Fed, probably amplified by continued high inflation. But sorry for farmers, that's not inflation necessarily of crop commodity prices. It can be of input costs and of final food prices at the grocery store. A continued story there of bearishness. And you don't have, if the economy is breaking or if the outside financial markets are in panic, you don't have grain futures going higher if there's this broader financial market risk off mode or worse. And that's why you would be bearish on the grain markets. That is not covering everything. I want to know from you, what did I leave out? What parts do you agree with or disagree with? Are you bearish yourself? I mean, remember, this was not my opinion, my complete opinion, but rather my portrayal of the bear case. And in reality, my market outlook is going to take all of those factors into account, but it's going to really discount the entire package as most extreme possible paths for grain prices. I think instead, you're probably similar. There are usually points of bearishness, and they can coexist with some certain bullish views too. And it's the bullish views I want to give you next week. And I think I could drum up some excitement for buyer enthusiasm. Again, only taking on what I think the bulls are out there talking about and pinning what could just be hopes at this point for higher prices to come. Follow me next week on the Comstock channel. I've been Joe Camp.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.